and welcome to ET Now Startup Central, India's first and only daily show dedicated to startups, technology and entrepreneurship. I'm Chandra Srikanth coming to you from India's startup capital, Bengaluru, and we kick it off with a special analysis we are doing this evening on how deals fared in the startup space for the month of November. Our November monthly funding meter based on data that we've collated from Venture Intelligence. For more on how the data stacked up compared to the previous month, compared to the previous year, I have two special guests joining me right here on Startup Central. Arun Natarajan, the founder of Venture Intelligence, as well as Tarun, Davda, the managing director for Matrix Partners India, which came at the top of the list of deals for the month of November. But before I get to Tarun, let me go across to Arun first. Arun, based on what you've analyzed for November, how's the deal picture looking like, the investment scenario looking like for startups compared to the previous month, compared to the same period last year?
In the month of November 2017, we've seen about 39 venture capital transactions being announced, worth about $189 million. These figures, not surprisingly, are 28% lower than the same period last year in terms of number of deals or volume. In terms of value, they are down as much as 38%. Now, the good news is that we've seen the fourth successive month of uptick in terms of the number of deals. After hitting a low of just 26 transactions in July, we've been steadily climbing, in the venture capital investing terms. And in terms of, also Matrix Partners is really emerged as the most active investor this month. Like we've discussed before, they've had a couple of good exits this year, but not really have been active in the investing side of things. So it's good to see them emerge on the top, and followed by other investors like IDG and Axel as well. So it's good to see Matrix re-emerge as a very active investor this month.
Tarun, Arun saying that it's good to see Matrix emerge as a very active investor, but the fact that you've seen maximum number of deals in November, is it a function of coincidence because most of these deals closed at the same time, or is it also a function of the quality of deals picking up, the quality of investments that you're seeing? What really explains this data from your point of view?
So I think it was a confluence of 3 or 4 factors. I think the first one is obviously there's been a deepening of the market, and if you look at sort of the mobile penetration, you look at sort of data penetration, clearly that's been one large contributing factor. I think the second is overall multiple new opportunities have opened up, which I think didn't used to exist say a year or 2 years ago. If I look at just local language content, that's been a big space that has opened up because of mobile penetration over the country. And I would say the third, and I would say one big contributing factor is large bellwether companies, so to say, which are like Ola, Flipkart, Paytm, well funded, stabilized, and so I think that's given it's kind of reiterates the India story, and a lot of this has contributed to more entrepreneurs getting encouraged to start up and believe that India market is deep enough, there is capital available if you're building companies the right way, and there is the talent also which is available now. So all these things have, I think, contributed.
And Tarun, take us through the kind of sectors that you're betting big on. I mean, the last year at least has been all about either edutech, fintech or health tech. But in terms of the investments that you're making, is it across the board, or are there sectors that particularly interest you at this point? Any trends that you can share in that direction?
So I think broadly, I think you've heard me say this earlier, we're very founders first in everything we do. So, a lot of our investments, I would say, are centered around, do we believe that this is an outstanding founder or an outstanding founding team that's going to create, real value. So we don't, consciously look out for specific sectors, or we don't go out and seek entrepreneurs in specific sectors. But that said, I think overall, I would say we have seen, I would say, 2 things happen over the last 12 months. One is that there are newer opportunities in new areas opening up, and when I say new areas, I'm talking about AI, ML, blockchain, agri-tech, local language, content relevant to tier 2, tier 3 India. Those are some, new opportunities. And we've also seen new opportunities in existing areas open up, right? So we've invested in, for example, a patient-doctor communication platform. We've invested in a student housing company. So I think it's a combination of both of these.
Arun, apart from November, we are almost near the end of 2017. So based on everything that you've seen so far, has 2017 ended up being a better year compared to 2016 as people widely expected? Or are we back to the pre-14-15 levels? Your own take on how the year has panned out?
So historically, what we've seen going back even to the 2007 period, once we have a very big year, obviously 2015 was a very big year, and then came a bit of a crash in 2016. The downturn typically lasts for at least 2 years and then bounces back. So just going by historical trend, I think 2018 should be a better year, and the signals are also there. For example, even in just November, it represents the highest for 12 months for both the angel as well as the seed stage. So that's quite encouraging. Rest of the stages, I would say, Series A having gone up a bit, 3 months continuously, has come down in November. Again, down as far as Series B is concerned in November, that is. Series C was up. So it's been a bit of a mixed picture between Series A and upwards, but it's quite encouraging that, we are seeing Series the lower seed level and especially angel, it's bounced quite strongly up in November from 19 deals in October to as many as 33 investments. So really it's pointing good as far as the early stage, which was quite shaky in the earlier part of the year. So coming to the sector mix, for example, we saw quite a bit of B2B enterprise technology investing happening in the earlier part of 2017. Typically a case when funds are putting their house in order, after splurging on B2C e-commerce investments. But just November, we've seen almost 70% of the investments, 67% to be specific, go into B2C, companies. And so, and especially, e-commerce companies like Chumbak, as well as Universal Sports Biz, and also in the healthcare consumer facing companies like Portia. So the consumer sector has bounced back to that extent. Again, it's a strong sign. Like we've discussed earlier, the dollars typically get absorbed, in consumer sector rather than B2B. Of course, B2B, the vibrancy continues, and towards the end of the year, we've seen more of a analytics, AI, and more deep tech kind of companies still finding flavor. But really, it's good to see B2C bounce back.
Tarun, the same question to you as well. As investor, has 2017, been a better year for startups compared to 2016? And, is this the normal level that we should expect? And perhaps 2015 was an aberration where we saw extraordinary amount of investment coming into Indian startups. So your own sense of how this year has panned out?
So I think 2014 and 2015 was definitely an aberration. I think the market got overly heated up. There was, funding pace, velocity, valuations, everything got ahead of themselves. 2016, I think was sort of a bulk of that correction, and sort of there was almost a entire market was in pause mode, largely because of some of these corrections, but also because I think a lot of people wanted to see what happens to the larger bellwethers. There was a lot of noise around, can Flipkart continue to compete versus an Amazon? Can Ola continue to out-execute Ubers? Stuff like that. And I think, 12 months out as we sit today in 2017, I think all our large bellwether companies have managed to raise, large follow-on, capital. And I think the question of, is this going to be a capital game? I think that question is, I would say, more or less answered today. And we're seeing all the Indian, large bellwether companies, execute really well against competition, right? So I think that has given, I would say, some relief to the ecosystem, and it's kind of, validated the fact that, Indian entrepreneurs can compete against the best. The second thing I would say is that just in terms of, deal pace, deal activity, I would say we're probably in the best phase that we've been. I think, right from entrepreneurs' expectations to the time that is available for investors and entrepreneurs to engage with each other before entering into a deal, all of that is now back to 2012-13 levels, which, where it's a good time. there are good quality deals available at at a good valuation. I think 2017, 2018, both of them are going to be probably the best years that we've seen as far as investments go.
On that note, Tarun, Davda and Arun, Natarajan, thank you so much for joining us for this special discussion on Startup Central. Hopefully, we will have another one at the end of the year to really assess how 2017 has panned out. But on that note, we're going to take a very short break. Don't go anywhere. Come back because we tell you about Facebook co-founder Eduardo Saverin's B Capital's debut in India. They invested in B Capital in MSwipe this week. We get you Kabir Narang of B Capital. We also get you a conversation with actor Farhan Akhtar on how he manages to stay fit and also where he invests his money in. Stay tuned and come back to Startup Central. Welcome back to Startup Central, and as promised, we have another investor on the show today. We're talking about B Capital's partner Kabir Narang. Now, this is significant because B Capital made its debut in India this week, so to speak, by leading a $10 million investment in MSwipe, a point-of-sale merchant acquirer. Now, remember, B Capital was founded in 2016 by Facebook co-founder Eduardo Saverin, as well as Valley investor Raj Ganguly. In fact, Facebook co-founder Eduardo Saverin will also get a place on MSwipe's board. So that's a high-profile addition to MSwipe, and they will really use this to build out their POS network going forward. And this was part of the recently recent Series D round that MSwipe managed to close. But for more on what B Capital's plans are for India, Kabir joins us on Startup Central. Kabir, thanks for joining us. Your first investment, MSwipe. What really got you excited about this startup among all the others that you must have looked at over the last year?
Yeah, no, this is our 9th investment overall, first in India, and we're very excited about MSwipe and partnering with Manish and the team. We're looking for several elements as we look at technology companies, and really 3 become very important. I think one is backing a great entrepreneur and a team. So that's one aspect. We spent some time with Manish over several meetings in Mumbai and Singapore, and just a fantastic track record of what he's built over the last few years. I think second is really a solution which we think is really made for India. It's a point of sale network, but a lot what you can do when you've got right now 280,000 merchants on that network, but really kind of what you can do with that, right? So it's really a solution made for India, thinking about levels of kind of communication, what the merchant requires, starting with transactions, but then how do you help the merchant manage the business and help grow that business, right? So, for example, if you're a small, say you're an art gallery in Delhi, you're a grocery store in Bangalore, or a restaurant in Pune, it really keeps the merchant at the center, and how do you make sure the merchant can benefit from all the digital payments that's taking off. And that brings me to my third point, which is really it's a massive market at an inflection point. And we've seen and observed over the years that at inflection points, businesses have an opportunity to obviously drive down customer acquisition cost. So that's a big advantage. More importantly, you can spend time getting a lot more deeper linked with your consumer and customer. And so that becomes an interesting time in inflection point, which we think is clearly the case with digital payments in the country.
Kabir, if I look at the fintech space in India, of course, there's been a lot of action in the last year because of UPI. The coming year as well, there's expected to be a lot of action because of lending-based startups gaining traction, credit-based startups gaining traction. So does MSwipe signal your broader interest in the fintech space? What other sectors will you look at as far as the India story is concerned?
Yeah, so both on the question on fintech and our stage, so even globally, we think about 4 key verticals where, we think technology is transforming. Financial service and fintech is clearly one of them. So to answer your question, absolutely, fintech is an important space for us. As we speak, we look at other opportunities, both in Southeast Asia, other markets in the US, in Europe, and in India. in the fintech space, so clearly a very important vertical. But we also look at other verticals, which is, how does technology transform consumer enablement? How does it transform transportation? How does it transform healthcare? And so those are the 4 verticals that we've chosen. In terms of stage, a lot of us come with, deep both operating but investing backgrounds. And so we are looking for businesses that have shown some product market fit. More importantly, have they shown some track record or data that we can observe saying, they're pulling ahead of the pack, have chance of being a market leader over time. So that's why I'm very focused on Series B, Series C stage investments. Globally, our fund is a global tech fund, and really looking for opportunities quite actively in Asia across those verticals that I spoke about.
Lastly, Kabir, before we let you go, in terms of the valuations in India right now, is it a more mature market? Are valuations more reasonable, rational compared to what we saw a couple of years back? Your own take on the investing ecosystem here and also the quality of startups that you're seeing?
I'd say a couple of things. One is, you're right, cycles are, nature of the business. There's a bunch of things of kind of macro cycles. So, at the macro level, we're probably at the top end of a macro cycle. In that, there are different technology cycles. And so you're right, you saw in 2015, 06, a lot of exuberance, where, probably a lot of investments that happened, chased down business models and companies at valuations, which were definitely frothy. I think we are seeing across Asia right now where valuations, and especially Southeast Asia and India, valuations kind of softening, especially in the Series B, Series C stage. And it's more because, there was a couple of things. One is structurally, you've seen a lot of capital go in at the seed, Series A rounds. And so now some of the companies are emerging, and the better players or the stronger ones will survive. Some business models will, actually won't survive. And so you can pick and choose, you can work with these great companies and entrepreneurs who have actually gone through that period, which was obviously a tough period, 2016. And that puts it, very nicely right now where, actually very active. Last 12 months, we've invested in 6 companies and, very actively looking at opportunities in Asia.
Thanks so much for watching Startup Central. Stay tuned to ET Now for news and updates.